What's up everybody, Tom here with another video. In this video, we'll be covering the latest stock market news for the week ahead. And boy oh boy, is it going to be a massive week of event risk. We have the US election, FOMC statement, and non-farm payrolls, just to name a few. And to cap it all off, we're still in earnings season. This is one of those times that you are excited to be a trader or an investor and be in the financial world. So let's get straight into it. Stay tuned. So in this video, I'll be covering our technical analysis thoughts on the S&P 500, Nasdaq, Dow Jones, gold, and also US dollar into the election and beyond. But we'll also be taking a look at the general market movements over the last week. One of the best ways we can do that is by looking at the heat map of the S&P 500. So Apple came in with earnings last week on Super Thursday and missed based on China sales. We saw Apple down 5.6% in one-day trade. Facebook down 6.31%, and Amazon leading the charge as well, down 5.45%. When we take a look at the broader markets and what happened on the market itself, it was pretty much selling most of the day, but then something interesting happened. We saw buying near the close, and this is unusual. Usually when you see buying at the close, it means Wall Street's starting to pick up positions. And when we take a look at our technical analysis of the S&P 500, it's going to make a lot of sense why they started doing that. So generally it was selling, then it was a bit of buying, but overall the month ended down. And this is not boding well necessarily for the next month of performance for the stock market. We talked about the stats last week coming into the US election if they were a little bit weaker, and what happens generally after the US election for the first month. And traditionally it's been a fairly flat to negative month after the US election regardless of who wins. Then after that, we're usually getting that Christmas rally and a nice big movement into the end of the year. But for now, we ended the month down. S&P 500 down 2% almost, Nasdaq down 2.38%, and actually the Dow Jones down 3.46% for the month. That's a pretty large move overall. When we're looking at the individualized sectors yesterday, it was clear that things like technology were leading in terms of decline. And that's because the earnings reports, while they look good on paper, were just not enough for Wall Street. We'll be talking about the hits and misses so far, but everything seems to be coming in pretty well. But that doesn't mean that it's performing well in the market. We'll talk about why that is in only a few moments. Weirdly enough, energy was the best sector of the day, with some people obviously going into it based on value plays. If we take a look at the sectors for the month, everything's down except for 3 sectors, and still utilities was the standout in the last month of trade. This week ahead, earnings is still in play. We've got a couple of big players here. We've got PayPal coming out with a pretty big announcement, I think. And then other than that, we've got things like Square, which has been a favorite, and Alibaba, etc. So there's quite a few earnings still this week, but it's really about the US election more than anything else. Speaking of other big news, this weekend we have a stay-at-home order from, of course, Boris Johnson in the UK. And this is a big deal. And when we take a look at the weekend trade reports, you can see here that we're down 1.51% now on weekend futures charting. Now, I never put too much stock in this. A lot of people ask me, Tom, what do you think about these weekend futures reports? And traditionally, they've been pretty wrong. During the crisis, they were saying that they would open up negative 3.5% over the weekend, and they were opening up like maybe negative 0.1% or 0.2 was really out. But this is down now 1.51%. And the Dow Jones for the weekend is down 0.78% off the back of that news. And obviously just the general sentiment coming into this US election so far. Let's just quickly talk about Q3 earnings beat data. We have a massive beat rate, 87% beat rate so far, with 827 beats and 125 misses. So this usually and traditionally would be a very positive time in the market. And I think it's important to think about that when you're looking at investment and trading. If you're not a little bit of a bull most of the time in the markets, often you can get in a bit of trouble. And we did mostly see beats. Now, is the market a little bit extended? Was it extended? Probably. Does it have a little bit more room to come down? Depends on who wins the election. But if it does come down to these key areas, it may be worthwhile considering that, hey, these earnings are better than a lot of people expected. Yes, they did change their earnings reports. It's not like Q2 where Q2 was so bad that everything was going to beat. It is still, there was an expectation of certain beats, especially in technology. So it might be worthwhile considering what you do this week, especially hitting decent discount rates on what we've seen before. Now, let's start off with our technical analysis. And obviously, the VIX or the fear index is one of the big things we're going to be looking at this week. We've talked about this one, and we've also talked about the month closing. So now that we're in November, we can take a look at this monthly and we can see it closed pretty much exactly where the previous week high was, at around this 38 flat level. If we go into the weekly, another strong move up here and strong hold traditionally as well. Remember, the fear index has this idea on usually it comes back and it wicks a lot like it did over here. It doesn't often hold the fear up. So it's holding the fear into the US election event. And that's because it may be a lot closer than anyone thinks. I think everyone can agree that these polls are random and they're not all looking that amazing. So I'm not going to get into the politics of it, but things are closer than some people could expect. And that's what the market's telling us. There's a fear of uncertainty, and that's what the VIX says. What's going to happen this week? Well, I'd be looking at numbers above this 41 kind of 0.3 area. And why would I look at that? Well, we've basically hit this zone 3 times now, and twice now really rejected it from a VIX perspective. If we get above that line, what's going to happen? It's going to spike, and it could spike into that 45. And remember, whenever the VIX is spiking, traditionally it means the stock market is coming down with it. Let's take a look at put-call ratios quickly here. Put-call ratios on the rise with an increased amount of puts being opened. It's probably part of the reason why we also saw Wall Street picking it up. The stock market came down to a decent level of support, taking a look at it in just a moment, and put-call ratios are up. I wouldn't say anything specifically knowledgeable about this right now. I think it's really just that it's on the increase, and we're going to see a movement. We've had some days where the market has been down and actually calls had been open to a higher degree. So it depends on what the retail community like you, me, and everybody else is doing to whether Wall Street wants to take advantage of it now. But really, it's all about US election, who wins, and then money coming back into the market after that certainty comes back in. Let's take a look at US dollar. US dollar has been traditionally quite strong recently. Notice this on the 4-hour chart here. We have a very nice little bullish hammer here on the right-hand side. Bullish hammer, bit of flow on, hasn't made a new high yet. It would be worthwhile putting that high in this week because I think it could be quite an explosive move if we get a new high. Bunch of algorithms coming into it, and then maybe towards that 94.50, 94.60 zone. We may even see that on the Monday if people continue to hedge into the election and take out some of the uncertainty, of course, from their portfolios. The 93.85 area, 88 area over here has always been traditionally the very strong resistance that we've been seeing recently. So to see that kind of close slightly above is bullish indeed for the US dollar. And at this point, we're looking at buys on the US dollar into the uncertainty. And then after that, into, of course, non-farm payrolls later on the week, we may see weakness in the dollar depending on the results. Take a look at the Dow Jones. What's going on there? Well, we talked about a double top last week. We talked about these 2 resistance peaks here. And then, of course, this intervening trough being closed against. The weekly looks like it's closed below here, but I will caution anyone using the Dow Jones as a lead indicator or an indicator right now in the markets. In the last couple of years, especially since I started trading many years ago, we've seen a big transition to the S&P 500 as the lead indicator in the markets from the best technical analysis perspective. And I always look at the Dow Jones, it's worthwhile considering, but I don't put as much stock in it as I necessarily do for S&P 500 breaks. That's just my opinion, but it's the way I look at it. When we look at the weekly, everything looks pretty bearish here on the Dow Jones. The daily, of course, we're about to see that cross of the 20/50 exponential moving averages. Got a lot of new time viewers here that have been asking me which ones we use. We use the 20 exponential moving average, the 50 exponential moving average, and the 200 simple moving average. And you can see here it bounced a little bit off that zone. 26,500 closed for the week, a nice psychological level. The Dow likes to trade in 500 blocks, so it makes sense for the weekly to close around there. On to the Nasdaq. What happened with the Nasdaq? Well, this has been the best day trade of the week. There's no doubt in my mind that 200 points on the Nasdaq, every 200 points has been beautiful trading, and I hope a few people in the community have been able to take advantage of that and do quite well. We've really been talking about it now for I think 3-4 weeks, where we've just been talking about the 200 point movements and how strong and good those zones have been. Let's just quickly take a look here on the 4 hour at the NDX. And I want to mention the 4 hour right up because I want to talk about this 11,000. Notice the market came down to this level, hit the 11,000, slightly through it, and then started bouncing. And the real market here closed at 11,052. But if we go into the futures trading here, notice how there's even more buying, 11,105-ish on the close, maybe 11,100 on the close. This just shows that when the level was reached, being the 11,000 flat, a lot of buying pressure came in. And this is where I would have been as well if I was a day trader, scalper, or even just anyone setting levels. The 11,000 made so much sense because it's again another 200 point increment. This week, what could happen? Well, it could go back to the 11.2, find some resistance. Probably at that point, the 20 exponential moving average will be moving with it. And we can see how it's acted around that. It's generally found dynamic resistance around that point. So every time, 11.4, we had support, we had resistance, we had a 20 exponential moving average, we even had a 200 spike up, and it sold off. Now we're going to have support, we're going to have 11.2, the 20 exponential moving average, previous futures support all the way around this zone. And of course, the touch is most likely going to act as some form of resistance. So I think personally, the Nasdaq has been one of the best trades. It's been one of the ones that all of us have been looking at quite a lot. Onto the real NDX, and you should always do your analysis whenever possible on the real markets, especially on the weekend. We have a 2050 cross well underway here on the 4 hour. But notice on the 4 hour real NDX, we're getting quite far away from that 20. So I think it's due for a bit of a pullback, possibly into the election. We'll have to just see where the risk is in terms of what Wall Street says. Onto the weekly, let's just take a look there as well. Weekly closed right on the 20 exponential moving average and bounced up. This is what should have been touched now for a little while. It hasn't been reached in so long. Like even last time when it came down, it didn't quite touch the 20 exponential. This is the first touch, a very good zone. And notice how in the past, generally these 20 exponential moving averages on the NDX, it's moved lower, but not by that much. Remember, we do have earnings beats. Earnings beats means that there is a positive kind of underflow, undercurrent in the stocks right now. So if things get better after the election and we start to get on handle on everything else, then all of a sudden you may only see a little bit further downside and then start moving up. You can just see it over here. Like it's hit the 20. Other than the crisis period, generally it hasn't got that much further down unless it's been a really big correction. So worthwhile checking this 20 exponential moving average, considering where it is also with the Nasdaq. The S&P 500 came down. Look how it almost touched that 3230 zone. 3235 started finding bullish pressure. And when we look at the futures and we go down to a 1 hour chart, notice here as well, after the close, further buying pressure came in. So if we're looking at this futures only, we have this 3240, 3235 area, and then we've got these body closes here at 3290. Whereas if the market kind of gets a little bit above here, I could very easily see it going back to 3340, finding resistance there, and then potentially selling off. We'd be wanting to watch this 3240 now, because if it gets through there, almost certainly it will go and gravitate towards the 3200, just because it will magnet to that zone. And anything under the 3200 will really expose that 3000 level, another key critical buying zone. I think if we see a shake up in the election, that's where the market will probably go to. If we see pretty much the standard quo this week into the election, and of course Trump wins, potentially we do see a bullish momentum come back into the market, at least initially, and then some further weakness after that. It's going to be very, very difficult to call this. All we know is that the implied volatility on the markets is basically going to be saying between 2 and 4% move easily on the markets that day. So let's go back over to the S&P 500 and just talk about the monthly closes and everything that's happened so far. So the monthly did not make a new low. It basically closed at a 32.69. We'll be talking about the pivots tomorrow and where they're opening up and what they're predicting. And you should always look at monthly pivots. It's really, really good to. But for now, we're getting that wick touch of the previous body opens over here. But for now, we're just basically seeing the market come back down and test those previous bodies. If we go over to a weekly chart, again, the double top is in play, but it has not closed below. A test or close below this 3200 zone is going to really expose the 3000. And why is that? The market will gravitate towards that zone. We've spoken about this a few times. We've spoken about how this is such an important critical zone. And also if we take an entire move fib of the last kind of retracement, so all the way over here, and we take a look and put that on our chart, let's do that right now together, you'll notice that the 38.2 and the 50 are sandwiched between that 3000. And that's usually where you see a market pull back to. If a market's going to do a corrective dive, it usually comes back down into the 38.2 and the 50 area. This area becomes one of the strongest buy zones, and that's just traditionally what generally happens with markets. You don't want it coming back that much further than that, because when it does, it's really saying, well, we're not that strong in terms of the bull trend. We took a distance as well from this pattern. If it was to occur, we'll take it just from the right hand side over here of the double top. Where's that predicting that the market goes? Let's say we take it all the way down to the wick. That's like a 28.86. But again, 3000 is going to be a very difficult barrier for this market to get through. And there's a whole bunch of different reasons why, but even things like the monthly 20, it has to get through a monthly 20 and really pierce it. And that's going to be very difficult for it to do. Look how the monthly 20 generally holds this market up. It doesn't get through very often. And even when it does, the rebound has been severe, fast, and very, very quick. Even during this crisis, it was very, very quick. So monthly 20, always one to have on your charts. Let's take a look now at gold and silver. What's going on there? Are we seeing hedging coming through? Well, Bitcoin, we certainly are. 13,827 at the time of recording this video. A pretty strong rebound in Bitcoin over the weekend. When we take a look at gold, gold was also really coming off that 1865 and finding some buying pressure. I think this week it's worthwhile having 1885 on your charts and seeing whether we can get a bit of a right shoulder here coming into the election. If we get left shoulder, head, a little bit of a right shoulder formation, then all of a sudden we have a smaller time frame, inverted head and shoulders, and that's going to predict, of course, back into the resistance over here at around 1910. So pretty nice moves if it was to occur. I'd be putting on 1864, seeing if we get a close below that. That will really trigger down to the 1850 this week. And I think that's really what I'd be doing with gold. I think gold's going to be too volatile to trade, but if it's what you want to pick, then those are the type of things. You got to look at explosive closes above, or at least closes above this level or below these levels over here. Silver, pretty similar, though silver did have a better kind of more stable breakout. It's had a body close above all these previous wicks here at the 2350. We've spoken about how silver likes to gravitate towards double zeros. So we see a strong move in gold. Where's silver going to go? 24. Previous supports will act as resistance, and we'll probably see some selling pressure at around that 24 level. I think that's pretty important. So on to the news and what's going on this week. We've got daylight savings time shifts in the US and Canada, a bunch of different kind of red news coming out, but probably most notable is we have an FOMC statement and press conference later on this week, and then that's followed up with a non-farm, of course, payrolls event. US election will still be the biggest news. There's no question, a 1 in 4 year event that is always wild in the markets. Come and join us, of course, for our Monday live opening bell session, which we'll be doing as well. And then, of course, the US election financial special. We'll be live streaming for quite a few hours talking about the finances into the election. And as we see, of course, the numbers come out on who potentially could be winning. This week is a 1 in 4 year event. It is so worth checking out the markets, and you can tell probably that I'm excited about what could be in store for us in this coming week. For sure, fireworks, and more importantly, we're going to be setting up for another 4 years of whatever the new taxation structures and things will look like. It's going to be super important from a stock market trading perspective. Good luck everyone out there, stay safe, stay healthy, and obviously make as much money as humanly possible. Bye for now.